financial opportunities mentioned on this show are often various companies, entities, and organizations that may not be directly owned, managed, or controlled by the real estate bank. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation for the companies, entities, and or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, MLO NMLS 233410 with United Mortgage Corporation of America, NMLS 3189. We're heading into Thanksgiving week. Yes, we are. It's a shortened economic calendar, a season of reflection, and a time that many households are starting to think about money, debt, and goals for the next year. I'd like to welcome our listeners joining us on Saturday here at 9 a.m. on Fox Sports Ventura, 1590 a.m., 97.4 FM, KVTA, and our Sunday audience at 7 a.m. on KEarth 101, who are streaming today at kvta.com. We'll be back next Sunday at 7 a.m. on KEarth 101 and streaming at KEarth101.com. Now, our past shows, our tools and resources, they're available at yourrealestatelife.com. They're also available at UnitedForLoans.com. You can get our past audios of our shows, and most of our programs you'll see on YouTube at Your Real Estate Life. Spread the word. Now, this week, we're taking a practical and forward-looking approach. We're looking at Thanksgiving week. It's the unofficial start of financial assessment. Yes, I've seen that over my 19 years here on radio. It definitely comes to that. We've had many people make decisions. As families gather, year-end approaches, people naturally start reviewing where they are and where the money went. I mean, we're all looking, what happened? Where did it go? I mean, what do we need to improve? What needs attention? I mean, it's at a point of the year, we got financial habits, whether they were good this year, they were bad, they need improvement. They become more visible because you're trying to put the cross through the T, the dot on the I. You're looking for that perfect plan, and you look to reassess your goals. Now, budgets change, expenses climb, and credit card balances seem to jump. The holiday spending and travel, gifting, and unexpected year-end expenses tend to tighten cash. Just last evening, I was out picking up some items I needed, and all of a sudden it's 100 here, 200 there, and my gosh, I went out to dinner, which we didn't. That would have been another 100. Oh my gosh. So these things add up. They're budgetary items that you need to account for, but they're unexpected. So you have to have that done. Now, we rely heavily on credit, setting the stage for higher balances moving forward into December and January. This is where you need to be proactive. And we'll talk about that today. Planning and paying these items off and becoming debt-free sooner. Mortgage planning, debt strategies, interest savings, and tools become critical. With rates, interest rates, and other rates on your credit cards and consumer debt, we have inflation, market conditions shifting. Reviewing your housing expense can create real monthly relief. Whether it's restructuring high interest debt, evaluating your home equity solutions, equity lines, or preparing for a 2026 purchase and getting pre-approved. This window is ideal for tightening your financial foundation. The shortened economic calendar still brings key data and may impact rates. Also, all the past data is still coming to play during the government shutdown. Even with the holiday week, markets moving reports are here, like jobless claims, consumer spending, inflation indicators. They can influence mortgage pricing. Staying informed helps homeowners and buyers time decisions more strategically. And that's what we do at United Mortgage Corporation of America. We're introducing how the Money Max program brings discipline and clarity and direction to your monthly cash flow. The Money Max account is designed to help you understand exactly where you and your money is going. Where is your money going? I don't know. We'll look at the maximum impact. We'll provide structured systems to eliminate inefficiencies, automatically smarter financial behavior, accelerate progress towards long-term goals. Now, for many households, it becomes a missing link between income and financial control. Now, as you sit down with your family, you need to ask, is my money working efficiently, or is it working against me? You got to get more and more and more because it keeps working against you. Let's make a difference. Today's program, we're going to get you back in the driver's seat. We're going to evaluate year-end planning opportunities. We're looking at different types of loans, FHA, VA, USDA, conventional options, reverse mortgage strategies for retirees heading into uncertain markets, home equity lines of credit, HELOCs, not HEMLOCs, HELOCs, debt accountability, a step-by-step plan to enter December with control, and how to simplify your monthly structure before the holiday spending hits its peak. Now, I want you to stay with us. Now, after the break, we're going to look ahead at the economic calendar for Thanksgiving week and the indicators most likely to move the mortgage rates and head towards the December 10th Fed meeting. Now, you're listening to Your Real Estate Live. I'm Michael Harris, MLO 233410 of United Mortgage Corporation of America, NMLS 3189. Visit our website at yourrealestatelife.com. You can get started at unitedforloans.com. I want you to take a moment to reflect as we head into this Thanksgiving week. I want to make sure you are doing what you can do to have your money work better for you. This is Fox Sports Ventura, 1590 AM, 94.7 FM, KBTA on YouTube at Your Real Estate Life. We'll have more after the break.
And save money today. Call 888-5433-980. What you told me is you understood about it. Look at it. We should do interesting in life, but we got all the debts. Personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle. If you want to learn more, call 888-543-3980 and request your information today. Or risk at ahitmoney.com. Risk at ahitmoney.com.
Welcome back to Your Real Estate Life. It's your source for real estate insight, mortgage strategy, and economic direction. I'm Michael Harris, MLO NMLS 233410 with United Mortgage Corporation of America, NMLS 3189. Contact me at 888-543-3980. That's 888-543-3980, or visit us at unitedforloans.com. That's unitedforloans.com, because we are for loans. We're just not for the interest that you're paying. Now, you can also go to our show site at yourrealestatelife.com and spread the word. Let's get out on that YouTube channel. Now, I know you're listening to the radio and you're not the YouTuber perhaps, but spread the word. And we're looking to get that launched a little bit better in the days ahead. So we're working on all these items. We're trying to get into that social media as well. We've been on the air 19 and a half plus years now in radio. Been in the business now. I'm in my 38th year. We're getting results and getting the job done. Whether you're looking to purchase, refinance, move forward, go in reverse, we are looking to get the job done and get the right price. Now, your credit, your salary, your income, your bonuses, your overtimes, your partnerships, your real estate schedule, all these things matter. And it's pulling out the right income to get you qualified. Now, you also have to consider the property. Now, in recent days and weeks, we've been working with various condominium projects, townhome projects that have various items that need to be done, whether they're balcony re-inspections or they're going to be reserves or having the right insurance. These things matter. So you're going to get in order, but we also need to make sure the property is in order. And then sometimes changes need to be had, or maybe that's not the property for your purchase. So we're looking at that very carefully, but we look at the calendar each week. And as I said, it is an abbreviated calendar. It is. So we're going to look at what's going on Thanksgiving week. It's a shortened week, but don't let that fool you. Things are going on. The data, it's going to be looking, and it has impact on the bond market and the mortgage rates. So we want to make sure you are aware when you're going through a transaction, and that's what we do at United Mortgage Corporation of America. Now on Tuesday, starting on that day, because nothing's going on Monday, so to speak, but the S&P Case-Shiller Home Price Index, the measure of home price direction, high gains and pressure and affordability. We have the HFA House Price Index, important on conforming limit adjustments. So we're looking at that. Consumer confidence, how are you feeling? The key measure, the holiday and spending outlook as we head to that season. On Wednesday, November 26th, we have the big data dump. We have the markets closed early, so volatility is usually common because a lot of the traders aren't really there. So you got a lot of the younger and some rookies and some everyone hedging and not sure what to do. So we have initial jobless claims, a real-time labor market indicator, GDP, second estimate for Q3. If revised higher or lower, rates can react. We also have the rates reacting because of that time in the market closed on Thursday. Because of that, they don't want to be exposed. We have the core PCE, which is a preview in advance of some of our indicators coming on later about inflation and movement and how it affects bonds. Pending home sales, they look at the contract activity leading into the year end. Now, some of these contracts, people have been going into contracts, and then what happens is maybe they're canceled. So a lot of people are feeling, oh my gosh, rates are going to go down, and waiting can hurt you. So I would love to show you your individual scenario and how that may be that decision. But we're finding a lot of homes that were listed perhaps are coming off the market or they're selling at a lower price. It has to do without really pushing the rate, not the rate, but the value of the home higher when it's more level. So when we go up 1%, 2%, 3%, it's not 5, 10 and higher. Not as yet. As we get more people in the market, perhaps later in the holiday season or early next year, we look at what's going on with the Fed, as now December 10th is not a given. I thought it would be. But with this government shutdown, news coming out, we're kind of meandering below that 50% level, and we're waiting to see what's going to happen. But on Wednesday, again, we have the FOMC minutes being released from the previous meeting, and that's going to have some indication for that December 10th, perhaps. Markets close on Thursday. Happy Thanksgiving. Get those leftovers ready because we have Friday, light volume, but it is Black Friday, half-day trading, light volume. Watch the 10-year Treasury closely because we're going to watch that kind of fluctuate as we head into the weekend on that holiday week. Now, consumer spending updates will guide inflation as you see everyone you're watching the TV and we're at the so-and-so mall. And okay, so you're going to get all those reports. And whether you want to be there or you want to watch them, that's entirely up to you. I might be watching a little bit of football, so we'll see what's going on with that. But any geopolitical headlines will also cause some ripples and some effects. Not that we're wanting those, but those do indicate direction sometimes with mortgage interest rates. Now we got to watch these rates. We're going to watch the GDP very carefully this week for upward pressure on yields. We're going to look at if labor is softening. We're going to look at consumer confidence if it's dipping. We're going to see if rates will improve. The FOMC minutes kind of leading towards caution. And I kind of been talking about it. It's like, again, if you're going through the fog, you go slower. If it's raining and there's a lot of puddles and your car is hydroplaning, you go a little slower perhaps. You just don't speed it up. So as I was heading to the station and I saw a car off to the side of the road and they were trying to tow him over the side. I mean, it happens. You got to be careful. So the same thing when it comes to interest rates. If we don't have the data, we don't have the information, we go a little bit more cautiously and maybe err 6 weeks later and do it later. But again, political pressure, too late is the indicator there. We have the Fed, chairman of the Fed, his seat is up in May. So that's coming around the corner as well. And there you got to narrow down to about 5 different candidates already. So that we're watching that too. And we're watching the indication or direction of the market. Now, we're looking at whether the Fed's going to hold. We're looking at they're going to telegraph the next moves down the line and how the housing is absorbing higher payments. Last week, I talked about that 50-year mortgage. I mean, it has its place. I don't believe it's going to replace the 30-year. It's going to be a tool or an option. If you have a kid going to college, you need to save a few $100 a month, you'll do it, but you're not going to reduce your principal that much faster. But it's going to be an amateurish try to save money monthly to pay for other items without using a perfect financial GPS. Now, if we ran a comparison between the 30 and the 15 and the 20 and the 40 even and a 50 and all these things, we can come up with a perfect plan and understand how long it will take you to be debt free. But sometimes it's a temporary cash crunch. And as we talked about that in last week's program, it's not a bad thing. It's not the best thing, but if it's abused, it could hurt. And you don't feel the hurt until much later on. And that's where you need someone helping you, guide you through this process, giving you best information for you and your family. Now, as we look at year end, it's a smart time to evaluate, as I said, FHA, VA, USDA, conventional options. A lot of these FHA options that people have done in the last few years with lower down payment, they're a little bit worried about their equity, but you had a higher interest rate. Interest rates have come down a little bit. So there are what is called a streamlined refinance that you can do with FHA without an appraisal. The value isn't the issue. So we can lower your rate. So if you have an FHA loan, I want to talk to you. If you have a VA loan, same thing. It's a VA streamlined refinance, an interest rate reduction refinance, and it could save you potentially hundreds of dollars. So we can look at that as a potential outcome. Many of these I've been able to do at no cost, not just no points, but no cost. So I'm looking to help you save monthly money. Now, the best thing is if you could redirect that money and pay off additional debt or use it wisely rather than going, hey, honey, we freed up a couple hundred, let's buy this. That's not what I'm trying to do. I want to get you on a path that makes sense. Not that I'm going to budget you and make sure, oh my gosh, but we want to get you on that path rather than making your home that piggy bank, especially when you're doing an IRRL or an FHA streamline, when your equity could be tight. So we're going to review those options with you. We're going to go over what we can do, conventional as well. Also, we're looking at high balance, jumbo loans. There is some savings that can occur. Some of these loans have 5-year, 7-year options now, depending on how long you're going to be in your home, and may make sense. There is a loan for each particular situation. Not everyone should fit into that one box. Now, speaking of that, we are looking at reverse mortgages. Reverse mortgage, you could be 55 years of age for some proprietary loans, 62 for government reverse mortgages. In some states, you could be 60. So we'll look at that, whether that's Massachusetts, New York, or the state of Washington. But we can look at this, but you have to look at equity you have in your property. So we want to utilize a strong loan to value. We gain the date of birth, the property address, and how much you owe. And from that, we work on the numbers and we come up with a strategy in what you can access, pay off your existing loan, and you have an optional mortgage payment. Your normal mortgage payment now is for you and your discretionary to handle things you need to get done. So it's an optional mortgage payment. You can't outlive a reverse mortgage. So at least I've not seen it. No one's over 150 yet. So you can't outlive a reverse mortgage. Now, looking at that reverse, there's also a reverse second mortgage. So if you have an existing first, you want to keep or protect 2.75%, 3%, you can afford it, but you're looking for some more monies. We can look at a second mortgage on a reverse, also an optional payment. We've had many individuals move forward with that option. They can afford their current, but they have an optional second that doesn't require payment, just like a reverse mortgage. We can go over those details. Pick up the phone, give us a call, 888-543-3980. That's 888-543-3980. I mentioned about the states and the limits and stuff, and some are 55, some are 60, 62 on the proprietary in North Carolina and Texas. So there's a little bit of differences, and we'll go over that. But we get a lot of phone calls asking us, why should I do a reverse mortgage if I qualify, or a home equity line of credit? Now, a home equity line of credit, most commonly known as a HELOC, it takes a little planning. And you got to look at it because now you have a payment on a second mortgage. If you're using the funds, you got a payment. So now you have an additional debt that requires servicing. Now, if you have a home equity line of credit and you use it, pay it, use it, pay it, it's a good tool. Goes up, goes down, ups, down. You have simple interest. Simple interest that is perhaps paying amortized interest. So that's a very positive thing. Very positive. So as we look at that, that can be the answer. And I talk, a lot of you are saying, I don't need an equity line. I don't need more money. I'm fine. But that's when you set it up. Because if you have a lot of equity in your home and the unexpected occurs, you have the ability to either transfer, write a check, or access that equity, whether it's long-term or temporary. You have that ability. Now, unlike a traditional amortized loan that has a lot of interest early, it's simple interest. So 3% on your amortized loan is actually more expensive than 7% on your home equity line of credit. And with the prime rate right now at 7, we're closing loans at 7 plus a certain margin or item to keep the fees down. But you can gain an equity line, which is a lot better, 4 times better than any credit card, right? So if you have the equity, it's a better item to have because you're going to pay less simple interest. The minimum payments can be made, and you can borrow cheaper money to pay off more expensive terms of different loans. So we want to look at thoughtful economic planning and equity planning during this Thanksgiving week. Many of you perhaps are a little bit more available. Yeah, you want to spend time with the family, but take a time out. Let's take a look at that plan and let's talk. 888-543-3980. That's 888-543-3980. Now, a home equity line of credit is not required for the perfect financial GPS, the Money Max account. The Money Max account does work with checking and savings. It also can work with a home equity line. Now, if you've had your first mortgage for a period of time, you paid a lot of that heavy interest already, and you really haven't seen a tremendous amount of progress because you're not even 50-50 on your balance there until roughly 18 to 21 years, 22 years in, depending on your rate. If you looked at your closing statement, your closing disclosure, you saw on the bottom this large percentage. What is that? Oh, don't pay attention to the man behind the curtain. Well, pay attention. That number indicates the amount of interest that you're paying over the life of the loan, how much is being paid back. So you have a rate, you have an APR, which is the cost of obtaining that loan, including your fees for the year one. Then you have that bottom line number, the tip, the total interest percentage. And I don't know about you, I don't really look to go tip at 50, 60, 80% or 120%. So when you started your loan at 3%, you were about 64% interest. Because if you look at your mortgage statement, that's what it came out to be. So if your rate is even higher than 3, if it's 6, 7, oh my gosh, that bottom tip number is going to be over 100%. If your rate's over 5.2%, that's over 100. Now, if you're lucky and you got that 3%, congratulations on your 58%. See what I mean? If we could take that 58 and knock it down to single digits and even obnoxious numbers in the 1s or even the 2s, catch your interest. You're working harder to pay somebody else. I want it to pay for you. I want you debt free. I want to give you options that you never fathomed to have. Why reduce your goals or dreams and be restricted when perhaps you don't have to? I mean, when's the last time you reached in your glove compartment and pulled out a roadmap? Some of you don't even know what I'm talking about, right? This is something that's going to help you navigate, get to your destination as fast as possible, but for your finances. Now, every Thursday, we have an opportunity meeting, which allows you to see about you wanting to pass the word. So I encourage you to go there. But to start, anyone, I want you to go to our Tuesday night, 6 p.m. webinar. Tuesday night at 6 p.m., we discuss on a 1-hour webinar the program, how it works, and understanding it better before you have an individual appointment. Because on an individual appointment, We're going to look at your ins and your outs. We're going to look at all your monthly, quarterly, semi-annual, and annual items. And we're going to find what your discretionary money is. We're going to understand these numbers. And it makes a difference on not the due date, but the statement date. The statement date matters when it comes to your credit and your score. Many people go, oh, I'm 3 points off of you. Okay. So the strategy, and I'll talk to you here, I'll tell you, I'll let you in. Look at your statement. When is your statement date? You should make your payment 3 days to 5 days prior to your statement date to get your credit score reported correctly to improve faster. Talk to me more about that. 888-543-3980. Go to yourrealestatelife.com to find out about our show, past audio, or get started at unitedforloans.com. You could register down below, get the information, or send out to me to gain the information for our Tuesday night webinar. Email me directly at interest@aheadformoney.com, AHEADFORMONEY.com. Now, just so you remember, my name is Michael Harris. I'm a mortgage loan originator. I have an NMLS number 233410. I'm with United Mortgage Corporation of America. I'm president and CEO. I've been doing this for 38 years, 19 and a half on radio. United Mortgage Corporation of America has an NMLS number. It's 3189. Now, if you were looking around, you're seeing NMLS numbers that are not only 4 digits, they're not only 5 digits, they're not only 6 digits, they're 7 and 8. I'm a little bit early. Been doing it for a long time. Give us a call, 888-543-3980. That's 888-543-3980. Let's start your journey today. We'll be back right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary, but every process presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on Fear 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers direct you to another. How can you make it all stop? Corporation of America, unitedforloans.com. Your guys. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
I've been paid up from work, my rent is due. Kids only trying to shoot.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, president and CEO of United Mortgage Corporation of America, MLO NMLS 233410, United Mortgage Corporation of America, NMLS 3189. Contact me, 888-543-3980, or visit unitedforloans.com. We offer loans. We're just not for the interest that you're paying. I think you kind of got that message. My goal is to reduce your interest footprint. Go to our show site at yourrealestatelife.com and spread the word. Your Real Estate Life on YouTube. Now let's pivot and continue to talk a little bit about something critical, that debt, the accountability, the budgeting, all this stuff going into the holiday season. You've got to be ahead of it to understand where you're going. Things happen. I know it's the time of year. So Thanksgiving week historically is one of the most dangerous weeks for credit cards. All of a sudden, Black Friday, all of a sudden, now easy online. All of a sudden, all these bills start rolling in December and January, and you go, oh my gosh, what did I do? And then you got property taxes that are going to be late by December 10th. They're already due. Depending when you bought your home, homeowners insurance. You got all these things to worry about, and you're just adding a few more in. It's not that easy. Your purchases spike. Your budget drifts. And you got to imbalance. And you got to make the end of the year. And you start the year with a carryover. Let's figure this out. So let's look at budget reality. Most households underestimate December expenses by about 32%. 32%. Holy cow, did you still have 32% left over to absorb that? Probably not. I mean, credit card balances typically rise 8 to 13%. Now, of course, you get these little things. Oh, open a new credit card. We'll give you 30% off your purchase. Okay. All right. Or you go even to the grocery store and they say, oh, you saved. Well, shoot, I should just run back in and buy more stuff. Oh, inflation. Even as we're trying to get inflation down, the prices aren't going down for the inflation we had. So it's like, okay, well, we're not giving it back. We're just hopefully staying where we went up. So it's all about our reality when we're looking at our Thanksgiving and our New Year's timeline. Mortgage holders, we're not, cash flow and costs and all these interest volumes and all this stuff that I talk about. You're looking at what you got in front of you, but your mortgage statement says a lot. It's telling you how much is going towards interest, how much is going towards principal, and there is something you can do. You can look at your numbers. It's debt accountability. I know it's not sexy and you don't want to work with numbers. That's not what you do. You push them off to the left and the right and you don't want to handle it. I do. We can schedule a time. There's no strings attached. There's no obligation. But we really need to know the real numbers. We need to know if you're running a deficit each month. You have $1, you have $10, you have $100, $1,000, $2,000. What's your discretionary? We want to know what you think it is in reality. Everything. All your ins and outs. We have to look at the silent drains, the subscriptions, the irregular expenses, maybe even lifestyle that creeps up. We got to account for these things. They're there. You can't ignore them. They're there. Now, we got to kind of reallocate some of the spending. We've got to make decisions a little bit earlier and understand, and not after the bill arrives. It's a little late. Now you got to handle it. You didn't prepare. You're just now the trauma nurse. So we got to understand your interest exposure. As I said, interest rate versus interest volume. And that brings us right back to the Money Max account. It's someone smarter in the room than both you and me and many others combined that doesn't argue with you or talk back. It just gives you perfect information and times it perfectly to make the right financial decision. This is ideal. And it stays with you for your whole life. This is yours. And when you look at that, predictive analysis, decisions before you make them, understanding the repercussions of those decisions, it tracks your income, spending, debt, and schedules in real time. It reveals your interest volume, true cost of the debt. It suggests and optimizes transfers and payments to reduce lifetime interest. No one's touching your money. No one has your account numbers. No one even has your name in the operation of this opportunity. This is a sophisticated financial GPS that you operate and get perfect information and saves you time and money. Helps you plan for irregular holiday expenses without derailing your progress. It gives you that perfect comfort of how much money you would like in the bank, minimum, to help you sleep better at night and assures to attain that. It comes up with a perfect plan to get to your debt-free date. It gives you a way to face January with confidence, not credit card hangover. You don't want that. Now, think of it as having a co-pilot that recalculates every time something changes. Holiday expenses, it recalculates. Unexpected income, it recalculates. New loan or refinance or other opportunity, it recalculates. The shortest path to your financial goal, it recalculates. I want you to join me on Tuesday evening at 6 p.m. It's a free 1-hour webinar. You can register at the bottom of yourrealestatelife.com or send me an email, interest@aheadformoney.com. When you send that, it's not AI answering, it's going to be me. I'm going to send you out an invite. With that invite, I'm going to send you a partial presentation that you can watch on your own, but also 3 additional links giving a little bit of background about the opportunity, how it works somewhat, so you get a little bit of an indoctrination. I'm also going to send you my calendar, because if you can't go on Tuesday night, I understand. Let's have our own meeting. Let's talk about you, because eventually that's where it's leading. You can watch and see how this all works, but you need to know how it works for you. 888-543-3980. That's 888-543-3980. Go to yourrealestatelife.com to get started through our show and our company site, unitedforloans.com. You know, I look at people making decisions on purchasing right now, and it is a tough one. But if you're renting, you are making a mortgage payment. It's just not your own, it's your landlord's. And those of you who have these lower interest rates on a first mortgage, and you're saying, hey, I'm not going anywhere, I understand. It's a little bit of psychological play, as I mentioned, with interest volume on that rate. And we've had people over the last few weeks that are protecting that 3% first mortgage, but they have a lot of money needs, lot of other debt. And when we look to try to protect it and get a home equity line of credit for that 100, 200, 300,000 that they want or need or desire to get, it kind of balances out that rate number, and the average number ends up almost higher than market rate. Now, refinancing, most people saying, oh, I'm starting over, because you're starting on the amortization scale again. But if you're utilizing cash out for a return or increased value or eliminating other numbers, that's where we plug these in to come up with the plan that makes sense. Payoff time is improved, value is increased, equity position, maybe you're looking to do some improvements to sell in a year or so, or whatever the case may be. We want to make sure it's the right tool for the job. You don't want to bring a wrench when you need a screwdriver, right? And that's a real fun one, trying to get that in the cross nose or the, okay. You know, you want to make sure you have the right tool. You want to bring an axe when you need a saw, whatever it is, I don't know. You know, just because you hear some items today, I don't want you to feel that you have the ability to get the job done perfectly. You may get it done, but I don't want you three-putting. I want you in the hole. You're only as good as your offensive line that's in front of you. The professionals that are there to help you and guide you through the process. If one of them or you have someone that's not there, the defense comes in and you're a scrambling quarterback. I'm Mike Harris. We'll have more after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, MLO NMLS 233410 with United Mortgage Corporation of America, NMLS 3189. Now, I am a licensed broker here in the state of California. I could sell homes, but I don't. I refer those. But I have a broker's license, 00991234. Very easy number to remember. And you can call me, 888-543-3980. That's 888-543-3980. Visit me at unitedforloans.com. That's unitedforloans.com. You can go to our show site, yourrealestatelife.com, and take a look at our YouTube, Your Real Estate Life. Now, today, we covered a bit. We're looking at the Thanksgiving week, debt, discipline, and your financial game plan. We're looking at covering items here during the short economic calendar that we had. The data kind of influences where rates are going to go. We're going to see a lot of gyration with less traders on the market. So we're going to keep an eye on that. But we're looking at year-end financial decisions for homeowners and home buyers. We're looking at debt accountability and practical budgeting as the holiday spending ramps up. Now, I'm hoping you're on top of your budget, but it couldn't hurt to have a review. It costs nothing to do so. Give me a call, 888-543-3980, or email me at interest@aheadformoney.com. We're going to look at that and kind of see maybe how that Money Max program can work for you, making smarter decisions, reducing your interest volume. Now, we're taking your calls and your questions during this holiday week all the time. We're here. I got 19 Thanksgivings that I've done as I've been here on radio, and 38 of them in the business. I found a lot of times it's the most meaningful business that I get because it's people that are motivated for the right reason. They have time to make the phone call, and we take action and get that job done in the month of December. Now, we had a few different questions that I've been seeing coming in. They asked, what is your biggest financial goal heading into the new year? They're asking me what mine is, but I'm going to ask you what yours is. I mean, is it lowering debt, refinancing, home purchase? I mean, more stable monthly budget? I mean, it's a great question. I mean, we're looking at the best answers depends really on where you sit today. If high interest rate credit cards are eating your cash, I mean, you're looking at debt reduction. I mean, what is it that we need to go after first? I mean, if you're carrying higher rates in today's market and rates are lower, maybe we look at that. Maybe it is a refinance. Maybe it's not. There's a lot of what ifs. It's the same way when someone says, what's your interest rate? And I can answer in many different ways. So we need to find the stability, the focus, the tighter monthly budgets, the buffering for your emergency funds. We need to look at perhaps getting more affordable mortgage if that's the case. I mean, we're going to look at all these things as a priority. And we're going to look at your primary goal and look to fulfill it. I mean, I want to put together a 90-day action plan so we can kind of see, is your score up to where it needs to be? Do we need to improve the credit score? Talked about that earlier. What do we need to do? And that's where the Money Max does come into play, because it's going to put those actions in play for you today, tomorrow, and in the future. So a lot of people will use different plans. I mean, debt avalanche, debt snowball, where you're paying off perhaps the highest interest rate debt, or maybe you're paying off the lowest balance to build momentum to be, oh my gosh, we did it. But each time we take care of a debt, it frees up that payment to then move it somewhere else, strategically, but not guessing. So that's where the game of golf, or even, let's say with golf. So if you get up to the tee box and you hit the ball, you don't want to be in the water or the sand. You want to get on the green, but not only on the green, you want to get in the hole. So our goal is to get you closest to that goal as possible. Now, these other ways of doing things, envelope methods and avalanche and snowball and all these things, are better than doing nothing at all. You're paying attention. But you want to pay attention and play the game the best way possible and with perfect information. I mean, you do that with the GPS for your car or on your phone to drive. Why not do that with your finances? Technology's there. So we want you to take a look at that opportunity. And I talked about it, and I'm inviting you still to Tuesday night at 6 p.m. If you can't come Tuesday night, that's fine. Send me an email, interest@aheadformoney.com. I'll email you back. I'll get you access, but I'm going to get you some other information that you can evaluate and set an appointment directly with me. We're going to look at analyzing every dollar entering and leaving your household. Kind of shocking in real time. Instead of working from guesswork or hope and pray, I mean, we're going to recalculate and understand the path to eliminate debt, maximize interest savings, and improve cash flow. That's going to work ideally for you and your family, having it in one spot, not identifying you, your account numbers, and no one's touching your money. You can make a different decision, and it will recalculate and tell you where your timeline went and what you need to do to get on path again. It looks for timing. It looks for cash flow surges, variable expenses, interest rate shifts. I mean, Avalanche and Snowball can adjust on the fly through the MMA program. It recalculates the next best move every time when your budget changes. It leverages simple interest tools like home equity lines of credit where appropriate. Talked about that. Using properly structured HELOCs, it can dramatically help, but based on timing, it may not be the best. Strategically, we can look at insurance, but it's not for everyone. Checking and savings is the only thing we need. That's the only thing we need. It provides real-time payoff. It will adjust. It's dynamic. It's going to help with accuracy and help you sleep better at night. It replaces willpower with automation and accountability. It's not emotion. It's somebody who doesn't talk back to you. It gives you information perfectly for you to take advantage. Those of you who are doing your own spreadsheets, Excel and envelopes and all that, I want to eliminate a lot of that time that you spend to get perfect information and save you money. 888-543-3980. That's 888-543-3980. Now, as a mortgage person, a refinance, it does hinge upon a net tangible benefit. We're going to look at the remaining term, the costs, being able to utilize those monies to help save you money elsewhere. My goal is to not start you over paying that interest volume, but use that money appropriately to retire the debts sooner. So we're going to look at your budget. We're going to plug it in. We're going to see how it goes. I'm not just saying, oh gosh, let's just refinance and consolidate and see how it goes. No, there's a plan. There is a plan. Those monthly, quarterly, semi-annual, annual items, there is a plan with the discretionary money and understanding about freeing it up to allow you to make even a better. Now, another question that came across here, if I could eliminate one monthly payment heading into 2026, which would free up the most money? Well, again, it depends on where you are and how much credit cards, the interest rates. We just talked about Avalanche, Snowball, but it's, again, looking at the GPS program. And when we free up a amount that you pay monthly, it could then be redirected strategically to another idea or plan. It may take a little while before it starts attacking your mortgage. But again, it's going to do the best thing when it comes to timing, eliminating the highest cost debt first, strategically, using that, shorter term payoffs, discretionary, all those things matter. We talked about it. And it leads me right back to Tuesday. Where are you? Let's get you on the Tuesday night call at 6 p.m. 1 hour of your life, or you email me, interest@aheadformoney.com, and I'm going to send you information to evaluate. Then we can have our own meeting. You don't have to talk. You don't have to do anything on that Tuesday night. Just observe. Just observe. So another question, should I review my mortgage structure since rates, guidelines, and equity positions shifted this year? Oh, sure, absolutely. It's doing that review. But, the mortgage landscape's changed. Some of the underwriting guidelines have changed. We've seen Fannie Mae remove their score requirement, which also opens it up to competition with FHA. Sometimes that's a better, sometimes it's not. So we can evaluate that. I talked about an FHA streamlined refinance. For those of you who financed over the last year or so, definitely should do something there. Those of you who have VA loans, same thing. So absolutely, you should review. Now, if you want to, you can take your monthly statement. Okay, you don't get it in the mail. Go online, save your monthly statement, email it to me, interest@aheadformoney.com. I'll evaluate. I'll take a look. I'll look at the property address, look at the value as a lender sees it. I'll look at your balance, your interest rate, and I'll see what we can do. Let me know if your goal is to gain additional cash, maybe have an equity line, so we can see the room, so we can come up with a plan and go forward. We can always talk about the Money Max account, but I want to look at your lending profile first and understand where you are and where your goals lie. So, those are some of the questions that we have. And I'm actually looking at another one that came in. What's the plan to avoid January credit card fatigue? And do I need a financial system? Okay, we're talking about the financial system, people, the Money Max account. So what do you do to avoid credit card fatigue? You make a plan. You make a budget. You react prior to the problem. You're proactive, not reactive. So you got to make those steps. It's that holiday budget. It's Thanksgiving week. Take a moment. Take a moment before the family inundates you and you hear all about their problems and all about their successes for the year. Let's look at yours. Let's make that pre-plan. Call me, 888-543-3980. I'm there. No, I feel like I'm with some insurance company. I'm wearing khakis. Okay, give me a call, 888-543-3980. I want you to avoid that credit card fatigue in January, let alone all year. Let's make sure you're good. I joked around in years past, just because you have checks in the checkbook doesn't mean you have money in the account. Then I make the joke, that's why you buy 1,000 checks. Who's using checks these days? So all these things matter. So you can't avoid it by thinking about it now. You can look at today, tomorrow, and the future and do it better. Assist without somebody nagging at you, but you can log in and see 90 days and do planning and charts and things, stuff to your CPA, your tax preparer, make things easier. So as I look at these other items, I'm looking on the screen to see if there's other questions. A lot of them are still about that fatigue and things we've been talking about budgeting, and some people just don't want to deal with numbers. So we will have a sit down on the screen. We can do that, or on phone. I will give a one-page budget where you can loosely put in some items so we're not running around the house, or you're running around the house, yellow stickies here and there. So we can kind of understand your monthly, quarterly, semi-annual, and annual items. Kind of plug them in. I'll work with you. We'll do that on screen. We'll take care of it. No obligation. I'll usually 1 meeting, 2 meetings, maybe even 3 meetings, where we'll spend some time and make it very clear what the results can be. But that's really what we're trying to do. Gain results for you, not anyone else. Who cares? It's about you. It's not about everyone else. Now, when you have family, you do realize that your fun kind of changes. If everyone else is having a good time and there's no problems, that means you're having a good time, right? But in this case, I want you to be good with your behind the scenes. I want to make sure your monthly, your cash flow, and you're not sitting here juggling. We have many individuals who are juggling with 0% credit cards with due dates, and we're trying to figure out a way to meet those requirements. Just recently, we funded a loan for $233,000 on a home equity line of credit. He was doing some investment opportunity and some items that weren't coming to fruition as quick. It happens. So those monies did not come back to him in time to handle those 0%. So we were able to pull out the funds, pay off his existing second. It was not done perfectly right, and left him short, and it wasn't set up correctly. And we moved him to an equity line from a loan. Now that equity line allowed him to have that flexibility of simple interest, paid off the existing, took money and paid off 2 smaller cards, 4,000 and change and 20,000 and change that he was looking at. And then it left him with about $50,000 more. Now he has actually 53, and he has another 0 card coming up in December, a lot of stuff, for $55,000. It gave him the ability to handle that. So now he's been able to recalculate. He has some of the investment monies coming back in, hopefully beginning of the year, and he's going to be set right. But we plugged the hole. The goal is not to plug a hole, it's to prepare and not have one in the first place. And we were close. We got started in the 7th inning here, and we were able to come through and pitch the last 2 innings, and we're going to win. And we did. And that's my goal with you. I want to know what's going on with your real estate life. Are you renting? You're making your landlord's mortgage payment, just not your own. Or you're in a property where you're paying too much interest and your lender loves you. You don't need that kind of love either. I want to tackle the numbers. I love numbers. You may not, but I do. I look at people's reaction, and it may be the same reaction to doing what they do. I may understand it, but it doesn't mean I can do it. So I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. Each and every day, I look at lenders and opportunities and things that I utilize, and I look at various promotions and things that they do. And with that, I try to gain as many dollars or items I have in the bank that I can then use for my clients. I match the need with the opportunity, gain the best pricing available based on credit and other circumstances. And when somebody, as I said earlier, calls me and says, "Oh, what's the rate today?" I don't know your credit. I don't know the value. I don't know what you owe. I know nothing. I need to know something. So gaining better information, you don't want junk in, junk out. Because I'll tell you something, but it doesn't mean anything. So I have a client right now that we're trying to get the insurance correct for the association. She's all wanting to know what the rate is. I had to buy her rate down to 5.375% to get her debt to income ratios to work. So it gets a little bit more costly to lend. But I also need to know that the insurance for the association has enough replacement cost for the values of the units. And if it's underinsured, then it's not going to be approved by Fannie Mae, Freddie Mac, and the agencies. So now I have a dilemma. So I'm trying to get the best financing, but we may have to make some changes through insurance. And insurance has been a heavy, heavy topic this year. Your renewal, you may have been surprised. Maybe not if you listen to this program. But we've seen insurance move up fast. I want to explore your financing options. I want to look at your monthly items, and I want to put together a good plan when it comes to the largest item you have, your home. We'll analyze these items. Call me directly, 888-543-3980. We're going to look at your current plan and see what we can do to make it better. I'm Michael Harris. You're listening to Your Real Estate Life. We're going to be back next week with an exciting program. Give us a call. We're here on Saturdays and Sundays. Until next week, what kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-98.
I want you to enjoy your Thanksgiving week. We're going to be back here on Saturday on KBTA out here in Ventura, and we're going to be on Sunday morning on KRF 101. And we're going to be here during that holiday weekend. And you're going to be out doing your things, and I got it. But take down the number, 888-543-3980. Let's get your budgeting together, and let's spend this week doing that. I'm ready to take action, and I want that to be with you. Thanks for listening. We'll be back next week.